Sim Tshabalala, the CEO of the Standard Bank Group. Sterling set of results out today. Sim, everything firing on all cylinders, and the Africa story really seems to be gaining traction. Can you give me some of the highlights?
Yes, indeed, Bronwyn. Such a privilege always to talk to you, and thank you for this question. Let's look at it from a geographic point of view. South Africa was up 26%, a fantastic result. Operations outside South Africa, they were up 36%, and as it happens, they now make up 36% of our group. It's a fantastic result, and they drove every single line item, and we're very proud of those results. The next thing to consider is the business units, consumer, high net worth, and business and commercial grew off the back of a higher client base. So they had a larger number of people doing more business with us, borrowing and transacting, giving rise to great headline earnings arising from good net interest income and good non-funded revenues. Corporate and investment banking, same story. They are a large business both in South Africa and in Africa regions. They had client revenues up in the 20s, a fantastic outcome from that business as well. A large driver, of course, was high interest rates. So we had a high lending base, 1.4 trillion rand, and interest rates increasing off that base contributed to the strong revenues and therefore the strong headline earnings.
If you look to the outlook, we do have consumers under pressure, we have small businesses under pressure, and also corporates really battling to navigate the operating environment that they are dealing with from a general South African economic environment at the moment. I won't belabor the challenges, but Sim, is your outlook as positive?
Bronwyn, you and our shareholders pay us to identify opportunities, to manage risk, and to generate returns that adequately reward shareholders' risks they take for being invested in us. And so within that, we believe that we will still deliver the financial outcomes and the targets that we have spoken about. In other words, a return on equity of between 17 and 20% by 2025, cost to income ratio approaching 50%, credit loss ratio of between 70 and 100 basis points, and top line growth of between 7 and 9% compound annual. We think we can continue to deliver that, notwithstanding the challenges that we face in this environment.
And then just a final word, Sim, if there is one thing that keeps you awake right now, what is it?
Can I mention two?
100%.
Infrastructure.
Go with those two.
Infrastructure, in particular power.
We're going to leave it there. Sim Tshabalala is the CEO of the Standard Bank Group. Thank you very much for your time. Great having you here on the Nielsen Network.